Welcome everyone to the Kendall Report, where I share my 42 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, before we get started tonight, I just want to tell you that if you would have had the indicators that the link is in below the last couple of days, you would have picked up a lot of these sell signals that came in. We had a great session in the live room today and going through how to use these PPMs and all that. So make sure you join, get these indicators. You get a free month of the live room as well. So hope to see you there. So let's talk about some big events happened today. I can tell you, speaking of the live room, the last thing into the last couple hours of trading, I didn't think I was going to get the number that I've been telling you folks about for a while, maybe for the last 4 weeks, maybe 6 weeks, which was 45.34. I said if we close under that, that will confirm an outside reversal on a quarterly basis. And we got it. Somehow the market just sold off really hard, just collapsed into the close, and we got a 45.30 close. Somehow it happened. So I'm going to spend some time talking about what this means when I get into the technical section here in a few minutes. But this is potentially a very big event. And I would just say, odds are on my side to be right. You know why? I just happened to be looking at my phone, and there's a story in there that Jim Cramer says that we are going to have a bottom within weeks, and the market's going straight up. So, I mean, what better odds could I get for making this call? And, you know, that doesn't mean we're just going to collapse tomorrow. What it does mean is this is a quarterly number. These obviously you have to wait 3 months, and I'll talk about the confirmation and things that need to happen. And if that happens, what the potential is of this pattern. The potential is huge, and I'll go through that in a few minutes. But let's take a look at a couple things that are going on. We saw crude oil take a pretty big hit today, and couple things happen there, and I'll go through those details as well as far as the technicals go. But OPEC agreed to increase daily output to 432,000. Biden's going to sell 1 million barrels a day for up to 6 months, and I'll talk about that when we get into the crude. So that was maybe. It looked like maybe that was the impetus for maybe a rally as we came in. Last night we were trading 46.14. I talked about in the technicals last night that I was expecting an R1 S2. We actually printed R1 all the way down to RXT, or STX, I'm sorry, down to the extreme projection in the low of the day. And that's how we got to some of these numbers that we were able to print. But we had, PCE, inflation was out, so that was on everybody's mind. 5.4. This is the Fed's favorite measure. That's 5.4 year over year, 0.6 on the month over month, which was right in line with what everybody was expecting. And we had jobs come out, claims, and that came in at 202, which was 195 expected, no big deal there. And continuing claims continues to fall down to 1.3. And I've been talking about the employment situation, looks pretty robust here. It continues to improve, and that's fine, but it's not necessarily going to equate into better numbers on the economy, especially with the inflation and some other draws that are happening right now. We also saw Chicago PMI come out. It was a little better, 52.9. Like I said, the metrics seem to be really good. The markets are struggling here because it's hard to see the future being that much better. So let's I just want to go through one last thing here as far as the metrics go and the economy is I'm still expecting that we're going to see a big slowdown. I think housing, interest rates, all of these things are going to continue to impact the economy at levels that maybe aren't measurable right now, or maybe a lot of folks are not looking at, but I believe it's going to continue to be a drag. So let's start to dig into the database, because most of the stuff I want to talk to you about tonight is in the technical section. So let's get into the database here. So we had some interesting things come out of the database. Just a second while it comes up. We dropped a little bit. We saw we had 1,158 sell signals, 269 buys. We watched the bullish percent drop from 64.4 down to 61.47. So definitely a little bit of selling coming in. Still a pretty robust number. There's some decent numbers, but we did see some of the sectors turn a little bit negative. Yesterday, there was all 11 of the sectors were negative. You know, we had the S&P down 1.6, the NASDAQ down 1.5, and the Russell was down 1%. But all of these numbers that we're looking at here are robust on a short-term basis, but this is the big story that I will talk about. What we're looking at here is really the intermediate database. And I talked about this last week. I thought we were going to get some traction. Fridays when we run those intermediate signals, they'll come out after the close tomorrow. Those of you using WaveTech will know those numbers pretty early on. And what I'm expecting is not a lot of traction. We could see a little bit of buying coming in, just because overall we're seeing a lot of stocks start to stabilize in here. There might be some buying, but we're not going to get anywhere close, I don't believe, on getting over a 42 handle or 42% bullish for a while. And there might be a reason, the way that the market traded yesterday might be the reason that we're not getting the traction. There's just not a lot of intermediate trends evolving here. On a short-term basis, it's been a great run for, the last 4 or 5 weeks. But on the intermediate, all we're seeing is this gyration, which you'll see in a few minutes when I go through all the technicals. So I'm going to spend a fair amount of time here in a minute talking about the S&P and how that setup is there. It's going to carry across the board on all the indexes. So I'll go through a very in-depth view of the S&P, and then after that, I'll hit on what the expectations for NASDAQ as we come in a week and the rest of the indexes. So let's go ahead and take a look at the S&P. So as we look at the S&P index here, this is the weekly, and we still have a reasonable print. We're not quite to Friday's close. We're right up against resistance, though, which is at 45.34. There's that number. We managed to close just under, but it's not Friday. Well, this is a Friday close scenario. And 44.97. So if we were to get back below that level, we're likely to come down and test the 10-week moving average. I'm starting at weekly here tonight, and this is going to be the key number. There's decent amount of support down at that level, about 100 points lower, somewhere between 50 to 100. We should see some stability. But let's go to the long term, and I'll come back to TradeStation here in just a minute. But let's go to this chart. I've shown you this chart before. This is the quarterly chart, and this is showing, I think, something very interesting. This chart goes back to all the way to the 1876, and I believe this is probably data that came from EWT, Elliott Wave. but this one is the 1929 high, 2 is the 32 low, and so forth until we get to where we are now. There's a couple places I want you to see here. I'm looking back at some of the patterns that we saw in the past. Every one of these major declines starts with a negative quarter. Now we had one in 2020. We know what that was. The COVID, Fed came in and propped us up. We have the opposite happening right now, where the Fed is actually taking away the punch bowl, so to speak. They're going to stop all the purchasing. They're raising rates. There's all kinds of stuff going on in the markets that wasn't going on before. So this is very unique that they're doing this for a good reason. Sorry, there's a fire engine going by the office right now. So anyway, what we're looking at here on, maybe that's appropriate, right? That's an interesting scenario. So we look at the quarterly chart here. And by the way, this is the setup here. This has got the PPMs on it. And this is one of the things I really like about TradingView, is that we can do these long-term charts like this and really do some in-depth understanding. Now the trends are still up. The PPMs are still positive, very positive, but the support levels are quite a bit below. We're right now 37.90 is the support level there. That's going to change when we get the first bar tomorrow. That'll recalculate. I'll cover this on Sunday night when we get to that broadcast. But for right now, this is going to be around 3,800 is the potential downside for the moment. But something's going to happen here as we flow through here. You're going to see all the PPMs continue if we get the follow through. This is if we get the follow through and we move down toward here, the PPMs are going to continue to deteriorate from the momentum, upward momentum. And so here's the big thing that I'll come back on screen just for a second here. This is the big thing to understand about this pattern. We are not going to get a confirmation on this reversal until the end of June. Okay, I'm just looking here. We're just coming into April, so we have to go through the next quarter to get the confirmation. And I'll set this up, and I'll be talking about this scenario. And as long as we do not make a new high, all-time new high, this pattern will stay intact. We'd have to trade over 48.18 to negate this. We could trade up to 47.20. There's some pivot numbers. I'll cover this as we go through the scenario over the next couple weeks. I'll just continue to build this story. We'll see what kind of market action we get. And like I said in the opening comments, it does not mean that right away the market's just going to roll over and collapse and the market goes up tomorrow. All the trolls will be out. Bob Kendall was wrong. This is about the next 3 months. It's about how we close at the end of June, and there'll be plenty of setups on everything as far as we go into this next market scenario. So just hang with me. Maybe, sell in May and go away will work. We'll see what happens. But the mentality that's out there around this market right now, I don't see it being bullish. We had that short-term bullishness that's set up. We still have that residual in our database. There's still some positive expectations from the short-term basis. And I don't see like a big collapse right here, but I do see potential, as I mentioned in covering the S&P just a minute ago, is maybe a 50 to 100 points. There's still solid support underneath the markets on the short-term level. And we actually went through in the live trading room and talked a lot about how this is setting up. So I'm going to take multiple days to uncover this. Otherwise, I'm going to do a 2-hour live stream tonight. And I want to keep this as concise as I can. But looking at this pattern here, this is potentially very similar to, if you look here where my cursor is, I'm not sure why it's white on my screen and it broadcasts black. It's very frustrating. But right at the top in 2000, we actually got 4 quarters down. There was a couple positive quarters, but for the most part, we saw everything going down. You see the PPMs were all collapsing here. And same thing happened again here in 2007, because the high was in November of 07, and we got 6 quarters down. So here's what I'm talking about here. We closed lower on the quarter coming into the end of June. So all we have to do now is close under 45.34. It could be 45.32. I'm okay with that. But we need to have a negative close for the second coming into that period, and that's going to set the tone for anywhere from 3 to 5 quarters more of downside action. Now, we do have these positive PPMs here on this is a quarterly chart. We do have those positive PPMs, which are going to give some support as we go through this pattern. And it's not going to be straight line down. It's not any of that. This is a very long-term chart. So this is worse than watching paint dry. This is something bigger. This is like watching a 30-story building being built. It's going to take a while to build it, multiple, a year and a half or something, whatever that time would represent. But this is a big pattern. Now, if we close higher, then we get a 1-month wonder again, and off we go. As far as I can see, it's going to be a little difficult to come up with a bullish scenario between now and then. Maybe Putin sending roses to Zelensky. I don't know. Is that really what's affecting this market? I don't think so. I'm not convinced that not that there's not some sentiment hit on as far as that goes, but we are seeing a lot of things going on in the background with the economy that I think are going to continue to equate to a slower economy. And primarily, housing's been a big, substantial part of this market, and I think it's going to become less of a part, and that's going to put some other pressures around market. Maybe there'll be some place where we'll see a rotation and we'll start to see something come out from that standpoint, but at the moment that's unknown, so we're into this technical scenario. So I'm going to go back to TradeStation here, and what I'm going to bring up now is the monthly chart. And I just want to remind everyone, this whole trade actually came from the monthly graph. If you recall, this monthly chart had a high of 42.18. The low was 22.22. This is the cash, not the futures. I believe the low on the futures was 42.12. Then we got this. We got more of a downside. I thought we were going to stay inside of that 42 to 48 handles. Somebody clearly pointed out that I said it was going to stay in that range. I did acknowledge that it printed down to the 41 handle. We got 41.14 on cash. If you recall that day, we ended up printing down on the low that day, but we rebounded, closed back over 4,200. So now maybe we expand the range from 41 to 48, but I still think we stay locked into this range. Now it's interesting. We got an increase in volatility here. So this is actually the market grid for the month of April that we're looking at here. So R1 right now is 46.52. We just printed 46.31. That would be your minimum. On the downside, S1 44.07. That maps out to what I was talking about earlier with some of the current support levels. Next level down, 42.71, then 41.34. So S3 for the month of April would suggest a retest of the lows. So I suspect that we'll probably do an R1, maybe an S2 in this pattern. That would put us down to the 42 handle. If we get through 4407, that's going to be your first sign. So that's not far from where we are. That's a day and a half with the current volatility levels that we're dealing with at the moment. So this is the monthly setup. So we closed above the 10 period moving average. The 10 has a 0.73. So this was, I believe I mentioned this last night or in the last couple of nights, is 0.73 suggested that the probabilities of closing above the below the 10 period moving average was not very high. It was less than 30%. Well, indeed, we rebounded after printing down to that 41 handle and did close at that level. 44.88 was that moving average. So we managed to close just slightly above it at 45.30. So that expectation, though, is suggesting that we're likely to see this 10 period moving average continue slightly higher because the PPMs are still at 0.73. That's not going to change a lot as we go through the month. So that's going to suggest that moving toward R1, R2 on the upside on this as we look forward here is 47.89. That would put us up into a pivot 47.30. I'll cover this depending on what we get out of the next couple weeks. All right, let's go to the daily and just set up for tomorrow. Then we'll move on through the other indices. But that's primarily what I wanted to discuss tonight from that standpoint of what's going on. We actually went down on the 10 period moving average was 45.29. This is the cash yet. Let me flip over to the futures. Futures right now, 45.31. Last trade, 45.41. We're up 10 handles right now. We got a cross of the 21 over the 40. And for my viewpoint, this usually signals a top. I talked about this a couple of days ago, that was going to happen. That has happened. We should come back to at least the 200-day 44. Let me get this exact number here. 44.66. Everything's pointing to somewhere between 44.80 to 44.20. Just looking at all of the configuration across the board of all of these indicators, from the market grid to some of the moving averages in the pattern, all of this stuff is pointing to this. What's interesting here, you see the daily, we're seeing PPM has crashed all the way through its first, second derivatives. This started to happen yesterday, and like I said, it was somewhat shocking watching that last couple hours trade today as the market declined down into that number. Now PPM2 has turned up a little bit. It's at 20. What that tells us is that it is 43.95. Number is coming up about 10 handles per day. So by the time we get into Monday, let's say Wednesday of next week, that's going to be around that 44.40 level. That's going to be most likely where we're going to support. So no big prediction of a crash. So if you're one of my favorite trolls that wants to tell me I'm wrong, I'm looking for a move down to those levels. We get there, we'll find out if there's more to the downside. We'll also have the output of the database on Friday night. We'll start to see if there's any traction at all on the intermediates. If there's not, that's just going to spell potentially further trouble. So I'll be looking to those numbers from that standpoint. So we look at today. Let me bring up the market grid so we'll get all the numbers. We'll roll through the rest of the indexes and the rest of tonight. I know I spent a lot of time on that, but I think it's the most important thing to understand as you go forward. And so let's dig into what the market grid's telling us. R1 45.47. We printed 45, so we've already got an R1 print right now, and it's backed off that just a touch. We're at 42. The S1 45.14, low so far 36. For my thoughts here, we can go R1, S2 again on the follow through on the downside. We are seeing some support. R2 is 45.65. So look for a pivot. Use the R1, S1 as a pivot, meaning that if we take out 45.14, look for 44.96, just below that 45 handle. And same thing on the upside, 45.47, look for 65. So I see this as a pivot day, especially since the PPMs aren't negative. We're still plus 0.20 on PPM 1. So we're a 0.15 is necessary to maintain the minimum trend. We did get a buy on 318. That's still a valid signal long on the index. So we're still looking at probably a consolidation in a few days, maybe trading down into this high 44 handle, and then we'll be able to figure out from there what kind of patterns next. So next market we're looking at here is the NASDAQ. NASDAQ is continuing the same type of pattern. We're all the way down to the second derivative here, but we're still positive 0.33. That number 14,805, low 14,875. That's going to be a good support number at a 0.33 ppm. That's going to suggest that there's actually a 60% probability that the market will remain above that number. So it's possible that this bid that we're seeing in here right now will hold out, and we'll see how the pattern ends up. But like I said, I don't see any major collapse here. And the whole first part of what I just went through is much longer term viewpoint of what's going on. So the PPM 2 is actually turned up 0.30. So it's crossing through its 40. I just believe we probably got a couple more days of sideways. We probably stay under the 200 here, which is right now at 15,151. That's going to be your upward ceiling for the NASDAQ. Next market I'll cover is the Russell. Russell continues. It got that RXT sell signal 2 days ago. This is second day down. It looks like we should be able to find some support looking around S2. This is daily. S2 would be 2046, S1 2059. So there's going to be decent support. It's interesting that we have a cycle that hit today. I mentioned that last night. We also have some new Fibonacci projections. I'm going to put that on screen up here. And the high target is 2212, 2275, 2314. So maybe this sounds confusing. I was just talking about bearish expectations. Now I'm talking about the bullish pattern here. This has been, and I'm just pulling this over a little bit, this has been the chart that I've been talking about for months, that this is still basically bullish, still has a lot to do with the banks, because the Russell has roughly 25% of all the stocks are regional and small cap banks. So that components continue to be out there. I think there's some more sideways. The only thing that's putting some risk into this is that the PPMs here have rolled over substantially, where we're getting on PPM 1 and 2, we're crossing over through the through the first and second derivatives. Now I'm going to go over, bring up RTY, which is up a little bit. Okay, so this is, I'm glad I brought this up. So PPM 2 is actually bounced off its second derivative, turned back up. PPM 1 is through it. So this is a continuation of this pattern. And it's interesting that the cash actually got the cycle signal for yesterday. This dot that you see on the page right here, this is the warning signal of the cycle. So tonight and through tomorrow, this is the cycle, and it's possible cycle low. We've got some fib projections above here. So like I said, I'm really not looking for any kind of major collapse in prices. We're really still within the context of the 62% bullish database. That's still part of what's going on. So it's not like that I put this video out on this quarterly that means it's going to happen this minute. Although I do have Jim Cramer on the other side of the trade, which seems like a good trade to make. All right. So looking at the 10-year notes going to interest rates, we traded down below the 10-period moving average. That number is at let me get the right number. That number is 2.35. We close at 2.32, so just below it. It looks to me we're going to continue to lose some momentum here. I talked about this last night. Around 2.4 is going to be the likely bottom of this pattern. The 21-period moving average is starting to come up. We actually have a fib projection here that came out for today at 2.16. So it does look like there could be some softening here of the 10-year as we go forward. As far as the yield curve goes, nothing really has changed. It's actually stabilized substantially here. This is the daily. We're at 0.26. When I say substantially, we're not printing into this negative territory. So we're continuing to see it just hover basically in a flat yield curve from that standpoint. So next market we'll look at is crude oil. It's down a little bit, trading 100.16. The low's been 99.24. This was the range that I talked about last night. Still looking at 100 to about 108, 109 on the upside. I think we're going to stabilize here. And I mentioned this strategic petroleum reserve sales that are going on. And I think just come up on screen, I'll go back to the technicals, but I think when you look at what's going on here, this is a joke, okay? There's, I think, around 560 million barrels in our strategic reserve. They're looking at selling a million barrels a day. That's 180 million. And if you just look at the demand per month, it's about 18 billion. We're looking at 18 million, 180 million, I'll get it right, 100 million per day, 3 billion for a month. And if we take it out 6 months, it's 18 billion. So we're not even 1% of the total market. It's really the best I could say here is that it's a joke at best. It's trying to, best I can say is it's a trick. Trying to get market sentiment, and I think market participants are a lot smarter than the government thinks they are. I think a lot of what happened in crude today was also OPEC stepping up a little bit, even though it was not that big a deal. So maybe there's 1.5 million more barrels per day. It will take nothing with the geopolitical risk and other things just to bounce this market back. I do think, though, the patterns that we're seeing here, just looking at the daily, that we're going to hold right around this level, probably continue to bounce in that range. Let's go to a weekly chart. And this is what I've been talking about. We got that spike up to 130, which was kind of a joke. It really didn't belong there. We're now trading right on the 10-week moving average, 98.14. That number is going up roughly $2. So it's going to be at 100. It's going to be right where we're trading right now as we come into next week. We don't have the market grid numbers here yet, but when they update on Friday and on Sunday night, I'll cover this. We're really looking at this rising 10 pattern right into the market grid. So we're looking at probably it'll probably be an R2, maybe an R3 support levels on the market. So as we go forward here, it's almost like a straight line. And I've talked to you folks on and on about this angle of attack. And I just want to draw something in real quick, because this is really what's going on in this market. And it's going to have an influence from the standpoint of what's going on in trend. So this is the 10-period moving average. This is the 21, and this is the 40. One of the things I talked about in the live room today is this 21-period average. You can see it here in the middle. Tends to be, I talk often about it being the demand line. So there is going to be good support for sure down at this level, and it is jumping about 1.75% per week. So, but this angle of attack should keep the markets above this, we're going to call the absolute low, probably 94 or so. But what is likely to happen, I'm just drawing this in quickly, is that the volatility should start to contract, whether it happens this coming week when we get an update tomorrow, or whether it happens the following week. But we should see some contraction here in that volatility. So the next market we'll look at is gold. It has a very similar pattern as you have this rising. This is the weekly rising 10 week. We have a PPM at 0.55, 0.30, and 0.20. So basically have that trend set up here pretty strongly. And I suspect just with the trajectory and the angle of attack, that's at 1904. It is going up about $16 per week. So that's going to be 1920 as we come into next week. And we are seeing some bleed off of some of the upward patterns, but we are getting into what I often talk about as the trend maintenance mode on the PPMs. And that is suggesting that we're just going to continue to climb along this angle of attack, maybe going back to similar what happened in 2020 during the same pattern as we came into, if you see my cursor over here on the left-hand side, that rising pattern is starting to set up similar to what we had back then. There was a blip back down to the 21 when it rose into the pattern. So it's looking a lot like that. The angle of attack is very, very strong from intermediate basis. Putting the daily up real quick. And I did mention this last night. All of a sudden, we get some fib projections underneath. I don't think they're valid. The PPMs are still very mixed. They're flat on the daily. I mentioned last night that over 1943 is really all I need. We're actually down 11 right now at 1942.50. We close, just maintain above that number. The absolute important number now is 1925 on a daily basis. So as long as we stay in there, we should see this thing set up. If we can get above 1955 plus on a close tomorrow, that would be very substantial. Final market I'll cover is Bitcoin. Bitcoin, I've been talking about, has been going sideways right along that 200-day moving average. Let me bring that tablature up here so you can see 48,195. We printed right in there, 47,360. We just hovered right underneath the 200. Now we broke down to the 10-period moving average. We're at 44,978. 44,943 is that number. But we are seeing the PPM starting to bleed off as well. Everything's turned over on a daily basis. So the potential, if we close under the 10 here, would be back to 42, potential for 41. It could get a little bit of pressure as we come into the weekend here. Let's go to the weekly. This was also the number that I was talking about last night. 48,210 was the high. We're looking at 48,358 was R1. So we printed R1. Now we're back at 44.9, getting close to an S2. So very quickly, we've reversed back out of this pattern. But the PPMs on a weekly basis on PPM1 is looking good. As I said, we would need to stay above 46 handle to actually get the PPM2 to turn up substantially. We'll have to see how this chart won't update until Sunday night at midnight Eastern time. So we've got a few days. I'll cover this as we come into next week. Well, folks, that's going to do it for tonight. This is the last broadcast of the week. This is for Friday. So thanks again for watching. Remember to go to this link, get the indicators. I think you're going to find super useful, especially coming in and learning how to use these things from me in the live room. We had a really good session today, and I'm going to try to get some of this stuff out on the internet, on the YouTube channel, just so you can see what we're doing in there and some of the insight into using these indicators. You should know pretty well by watching me on the channel. I know a lot of you watch every day, so I appreciate that again. And it's the weekend, so have a great weekend. Be safe, be profitable tomorrow in trading, and we'll see what sets up for next week. It's going to get interesting for sure. Have a great weekend, everyone. We'll talk to you on Sunday night.